Well, welcome into a daily editorial here on the KE Report. I am chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. And Jordan, I want to first talk about silver with you and throw out this general question that I've been asking a lot of our precious metals analysts, and that is, for silver, are we seeing a double bottom being formed or more of this bearish declining wedge? What do you think is more likely for silver?
Well, if you look at the weekly chart, it looks like a double bottom because it didn't go below 14 on a weekly basis. But the one thing about a double bottom, and a lot of these patterns, what a lot of people, they don't really understand how these patterns work. I mean, I see these charts all over the internet calling out formations that they're these specific patterns when they really don't fit the specific pattern. And what I mean by that with respect to a double bottom is this looks like a double bottom, but it's not a double bottom, because in a double bottom pattern, it happens almost, at least on a shorter term basis. A double bottom is pretty instant. There's not a lot of chop in between. And that's what we see in silver. I mean, we see at the end of September a little bit of a rebound, and there's chop for 4 or 5 weeks before it goes back down, and then it kind of took 3 or 4 weeks to bottom. So that's not how a double bottom really develops. So silver, I mean, if you look at silver, it's really oversold because it's trading well below the moving averages. And yes, there's some long-term support down around, I think it ticked below 14. So it was trading in the 13s, close to that late 2015 bottom. So there is some support there. I mean, it's fairly oversold. It's kind of building a little bit of a base here. But, aside from the very short term, I don't see anything that tells me this is the start of a bull market. And on the fundamental side, again, what we really want to see fundamentally is we want to see the Fed shifting policy away from they're done with hikes and they're going to be thinking about pausing and then going to cuts. And we're not at that point yet. Again, I think it's more likely than not we'll get to that point at some point before the end of next year. So putting all these factors together, I don't see this as the start of some big move in silver. Also, silver is it's even more correlated to inflation than gold. And when we look at what's happening in the bond market, we're starting to see a bit of a rally there. And so that type of action is going to be more supportive of gold vis-a-vis silver. So silver, I don't really see it getting going until inflation expectations are really increasing. And I don't see that. I mean, we're a long ways away from that happening. So certainly can rally here over the short term or the next month or so, because it's really oversold and sentiment is fairly bearish. But looking at all the fundamentals and all of that, I just don't see any reason why a bull market's about to start.
Okay, so not a skyrocketing silver price, let's say, but maybe this grinding out a eventual bottom, but some good comments there on what actually a double bottom typically is. Now, you mentioned the moves that we have seen into treasuries. There's been this general theme, especially this week, into more safe haven type of assets, where that's treasuries. Even the dollar is staying elevated, and the precious metals. Is this, do you think, all just on the back of more trade war fears and more indecision in the market, or is there something more?
It's really hard to say. I mean, I really hate these type of events where you kind of have news that impacts the market. And so we saw that this news that there was some, trade agreement, at least in principle. We saw news that was going to take place, and then the market had a big rebound, and then that basically completely faded and all went away. So for me, I would need to see where the dust is going to settle. I mean, I kind of like the bottom that the market put in before that news. And of course, it had a vicious reversal. Just in the last couple of days, a vicious reversal. So if I'm looking at the weekly chart, it's definitely looks like it's going to threaten lower levels. But again, I'm talking about the S&P 500. But, we'll see, Corey. I kind of like the bottom that was put in over the last couple of weeks. And if that can continue to hold over the next couple of weeks, I would think that, the market could at least stabilize and maybe trend higher because it is not really oversold, but it is oversold to some degree. And looking at the bond market, we're not seeing inflation expectations really increase. So in that scenario, capital is going to flow into bonds, and I think that explains what's kind of happening as far as the safe haven trade. But I really want to wait a little while and see what happens over the weeks ahead before making any strong opinion about where these things may go. It's really tough to call around news events.
Yeah, it always is. But one other quick comment regarding the U.S. equity markets is over the last about month or two, we've seen the S&P, when it has rallied, it's topped out right around that 2,800 level. Back in November, the very beginning of November, it got just above there to about 2,815. But even during this last run that really petered out this week, we reached 2,800 almost right on the dot. Do you see this as a pretty sticky level right now for the equity markets?
Yeah, I'm glad you mentioned that because I mentioned that in one of my updates a week or two ago. Looking at the chart of the S&P 500, 2,800 is really the clear important resistance right now. And obviously, if the S&P over the weeks ahead, if that can surpass 2,800 and trade above it, that is going to be healthy for the market. And that would also be negative for precious metals because if the market is going to trade above 2,800 and maybe it makes a false new high at some point over the next several months, that is going to raise Fed hike expectations, not permanently, but just at least at the time that would happen. And so that would be negative for precious metals. So I'm really watching the stock market closely because if it can surpass that 2,800 level, that is going to set up more of a chance that precious metals could break down over the next few months. However, if it can't get above 2,800, then who knows? Maybe the stock market it needs more time, or it has to trade a little bit lower before it can make some kind of an interim low. I would more be leaning to the scenario that it's going to break above 2,800. I see that happening at some point. But we'll see. It had the first test of that in recent days. It had the sharp reversal, so it's trading in a tight range right now, and we just need to wait and see. It's really not wise to bet on one way or the other right now. We just need to sit and let the market tell us which way it's going to go.
Okay, this is a theme that I have been talking about with a number of people, and that is not getting too aggressive right now, letting the markets decide which way they're going to go and then playing that direction. Let's also talk about that U.S. dollar, because after last week, the dollar did close the week at a 52-week high. Even this recent weakness, the dollar has been still trading in a tight range, and you can argue still in an uptrend. What do you think about the possibility of the dollar continuing this uptrend into next year?
Well, you said it. That's the key. The key is it's trading in an uptrend, and so I don't foresee. And this is another reason why I don't think precious metals are due for some massive rally here and some epic bottom, is because the dollar's in the middle of an uptrend, and it's going to take time and other factors for the dollar to eventually make an epic peak, or at least we've talked about it before, Corey. The dollar is just it's too low here for precious metals to be in this spot where they're going to begin some massive bull run. As you said, the dollar's in an uptrend. You noted that the weekly close last week, which was significant, so it's trading at more than a 52-week high. I mean, looking at the chart, Corey, there's really good support around, I want to say 95, maybe slightly below. If you look at my favorite moving averages, the 200-day, the 400-day. Those are right below 94, so very strong support at 95, 94. The dollar closed yesterday just below 97, so the dollar could decline, 2 or even 3 points from here and still be in a primary uptrend. So, it's having a little trouble here in the 97, the low 97 area. So, it's possible the dollar could crack a little bit and trade a point or two lower, but again, that would not alter the fact that it's in a primary uptrend, and it really has to go to higher and higher levels, before it gets to a point where it creates a problem economically, and the Fed might have to think about stopping its hikes. But we're not there yet. So yeah, that's the short and the more medium to intermediate term of it. Short term, it's definitely possible that the dollar can pull back a little bit, but beyond that, I still think we're going to see higher levels of the dollar next year.
Okay, and as you said, we do have that support and those moving averages trending up that should be further support for this dollar moving up. Jordan, what about that whole concept of the dollar moving up and the precious metals also being able to move up with it? I just had a conversation with Rogge Horner about this, and she more or less said, maybe if the U.S. markets continue to sell off, then this is a possibility, but that is a big if, and that is, again, the market determines. What do you think?
Well, I do want to note that in recent days, it's been interesting because gold against foreign currencies over the last month, it's been battling with the moving averages. And in recent days, it's actually pushed higher. So that's something favorable for gold in the short term. I'm looking here at that chart of gold against my foreign currency basket, and that's at it. I think it's closed at the highest level since the end of June. So it has made a significant move there. Is it significant in the long term? I mean, only time will tell. So that tells us that gold has been performing well in real terms, regarding all the currencies out there. With respect to, this big move higher in gold and it going higher with the dollar at the same time, I still think it's too early for that, Corey. I still think we would need to see the dollar index trading above 100, perhaps well above 100, and then you see the dollar. You just see it so strong and causing problems at the Fed. It forces the Fed to stop its hike. So it's really all related, Corey. I mean, it gets down to the Fed ending its hikes. So that's really what I'm looking at. And if that happens because of the dollar, then that's the scenario where you see both the dollar and gold rising at the same time. I mean, otherwise, we're still in the middle of a Fed rate hike cycle. Granted, we're probably in the eighth inning, perhaps, maybe the ninth inning. But we're still in that cycle. And so there's no fundamental reason why they both should rise together here for an extended period of time. But however, if the dollar keeps rising, it's trading well above 100, we start to see, more weakness in the equity market, economic data softening even further. You couple that with, better action in gold, relatively speaking. And then the Fed comes out and says, this is going to be the last rate hike for a while. That's the setup where you could see them both rising together for an extended period of time. I mean, otherwise, if we're just looking at a few weeks here and a few days here and there, that's just not significant.
Okay, I agree with you, and it's more about that longer-term outlook, but you did mention a number of factors that could be benefiting the metals eventually. It's not going to happen tomorrow, but as we progress through 2019, maybe that momentum will build. Jordan, great chatting with you. Thanks for your time today. Have a great rest of your week.